Right.
Get started.
All right, everybody. Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's up, bro?
What's good, man?
Man, welcome back from South Africa, man. I thought you were gonna come back with a wife or something. I was like, this boy. How was it, man? Did you like it? What did you like about it?
Man, amazing country. Love the culture. Love the food. Um, Loved everything about that trip. Good to see a lot of my family that I don't get to see pretty often.
Nice.
So I definitely will be going back to South Africa at some point. So definitely got that on my repeat list. Hopefully in the
That-
future.
That's what's up, man. That's what's up. It's definitely on my list of places to go. I know I've been always wanted to go there, so looking forward to going there. So yeah. But yeah, man, let's talk about this market, man. Welcome back to this side of the world. So if you are been sleeping under a rock, I'd like saying that now because I feel like from minute to minute, things change. From day to day, things change. Um, was it yesterday or 2 days ago? We have gotten the news that the cell phones and chips and all, not chips, like the cell phones and all this will be exempt from the tariffs. But then, if you wake up this morning today, ah, they're like, psych, we didn't say that, even though it came from White House that said that this will be exempt. So I think everybody was excited yesterday, like talking about a bullish move come Monday, where the future's going to gap up. I thought the future's going to gap up.
No,
Since the futures are open right now.
we have gapped up, but we've kind of lost the highs. So
Yeah,
I don't know how this is going to play out. Like I can't call it because the speed at which the information changes
it's
and the
it's it's,
looseness of
it's
how it
crazy.
changes is ridiculous.
It's crazy. It's
Because
crazy.
we saw the same thing with the 90-day pause, right? We
Yep.
saw the pause came out, right? Then the White House was like, "What pause? We don't know what you guys are talking about."
Yeah.
And then the
Yeah.
next day, it's like, "Okay, we're going to do a night."
What are you gonna
So,
do?
I mean, let's just be honest and call it what it is: market manipulation.
Mm.
Let's just be honest and call it what it is. This is grade A market manipulation
Yep.
because the 90-day tariff thing, somebody leaked the information, obviously, right? Before they were supposed to. Somebody
Again.
brought somebody brought the information public. White House wanted to be the one to break the news, so they lied about it and said, "Okay, we don't know what you guys are talking about."
Right.
And then they came out the next day and said that this is what they were planning on doing anyway. So I wouldn't be surprised if we see the same thing with this information. You know?
So you think this will be crazy, dude. If they're like, I mean, at this point, like, how do you even explain that to the average person who's trading? You know what I mean? It's like, do we even consider the charts anymore? Do we even consider, um, I think long term, we are probably in a good time to start buying some stuff. And that's just my opinion.
I agree with you
Short
100% there.
term, I feel like we don't know what direction we're gonna go from day to day.
Yeah.
So
See, the way I would play it is if you're a trader in this market, you're taking a lot of risk by trying to swing things overnight and predicting where things will move. Now, and I'll be 100% honest, you could guess right because either things are going to go up or down. So you got a 50-50 chance, right?
yeah.
But anybody who comes out and says, "Oh, I knew this was going to happen," I'm calling your BS because you don't,
Mm,
unless you got inside information,
that's all I was gonna say.
you really don't know what's going to happen.
Yep.
But you can guess right. You got a 50% chance, right? So if you're a trader, there's two things that I would do: straddles and strangles,
Hmm.
because you don't have to pick a side. But because the VIX is so high, you can expect a magnified move to one side or the other. So you can still make good money trading if you're playing both sides.
Yep.
Um, or stick to day trading. You have to probably work with like really, really small time frames, like 5 minute, 2 minute, 15-minute time frames. Probably
Yep.
wouldn't go over 30 minutes and trade intraday moves if that's what you want to do. But if you're a swing trader, I would stick to straddles and strangles. I would not be trying to pick a side because, again, you really don't know how the wind is going to blow. Because what's driving the market has nothing to do with fundamentals. It's
Nope.
all news
Absolutely not.
and headline driven. So that's how I would approach it.
Yeah.
Moving into this week, and as long as you got a 45 VIX that was flirting with 60 at one point, this is what you can expect because
Yep.
and you don't and this is the thing, you could be in the middle of a trade and you don't know what's gonna like something happens and then your whole trade just reverses.
Which is crazy because it's like it really can be like that. You can be like dated like literally in a trade, and the next thing you know, like if you have a stop loss or something like that, it start hitting. You're like, wait, what just happened? We were in the clear because some news came out, and yeah, everything just reversed from there. So I know you brought up the VIX. So the VIX is still pretty high. So which means there's a lot of volatility in the market. I want you guys to do me a favor. Go look at the spread. I think last week I was looking at the spread in SPX, SPY, and a couple other stocks. Those spreads were not a joke. Like at one point, there was like almost 50 cents between like each one. And it was like, I was like, SPY, I've never seen SPY move like that. You know, I was like,
Especially for something that liquid.
exactly. And the spread was so wide. And I was like, whoa. Even when we had that run up after the tariff pause came out, a lot of people were buying some really expensive position. I was
Mm-hmm.
like, that's what we're doing now. So there's no thought to going on behind this. There's no research. There's no analysis. There's nothing. It's literally just like it's going up. We're getting in.
And to be honest with you, the market makers are telling themselves that we need to be compensated for the volatility. So the implied volatility for a lot of these option contracts that people are buying, I mean, they're going to be expensive. Like they're going to be expensive. And the thing that you have to also worry about with these spreads is you could get into a trade. You may not be able to get out
Yep.
because
Yep.
if the spreads are so wide, you may not be able to get out of a trade cleanly.
Yeah. Because if you're
So
trying to sell, you're probably gonna sell for the lower price. If you sell, because sometimes it might be moving so fast that the next thing that's moving down so fast that you're trying to sell, it might be in the negative by the time we get out, depending on what brokerage you're using, right? It's like
exactly,
so.
exactly. So this is this. I'll be honest with you. This is the time where platforms like Robinhood,
Ooh, they're making a killing.
they're going to be making a killing, and also too with Robinhood, those execution prices are not always going to be as good as those other platforms like Thinkorswim or maybe like
Nope.
Webull or something like that. So if you're trading options in this market, you have to be very, very careful not to get chopped up, not to get trapped into, a good trade that could be a bad trade because again, you don't control the bid ask spreads.
Right. Right.
So you just got to be very careful. And I'll be 100% honest with you, going into this week, my focus, I've just been buying stocks. Just been buying stocks.
I mean,
You
at
know,
this point, like that's long term, you will come out to be okay. You know,
correct.
if you are okay with like the volatility and the craziness of the market right now, and you're able to navigate that very fast and able to switch your mentality real quick, you're not stuck in a meeting somewhere. You're not, going to the bathroom. Take your phone with you if you go to the bathroom. It can't it really is coming down to that. Like you have to have your finger on the trigger the whole time. You know what I
No,
mean? So
and you got to have a quick trigger.
yep, yep, yep. So another thing that I was like, I found very, very interesting is I'm looking at all the big investors. I'm talking about like what is to be banking, what is to be investors. I'm talking about Ray Dalio. I'm talking about the JP Morgan guy. I'm talking about all these different hedge funds, companies, people that own like really big companies. Like one thing I noticed is when the 90-day tariffs came out, JP Morgan pulled their sentiments. What do you think about that? They pulled this, they're like, oh, we're no longer thinking that the market that we're gonna be in recession, which is very weird to me. I was like, wait, literally 24 hours earlier, you were like saying like we're in recession and all that stuff, but now you're pulling it out. What happened? You know what I mean? Like,
That's
so
interesting. I did not hear about that, but
mm-hmm.
to flip the script in such a short period of time, I don't know.
Yeah,
Because
that's
again, bigger institutions tend to look at economic data rather than looking at headlines. They kind of, not saying they don't pay attention to the headlines, but they tend to look at their analysts are looking at economic data.
right.
Um, yeah, I don't know. That's very interesting. I'll be honest. Until Warren Buffett changes his mind, I'm not doing nothing.
Warren ain't buying shit right now. Warren is sitting back, relaxed. He's making money even though the market is like uncertain. So he's happy
Yeah,
about that.
he's collecting the interest on those treasury bills. As far as like making like what 4% on his money, at least 4% on
Yep.
his money.
We should
Um,
count to like I think we did the calculation like $1 billion a month or something like that.
but listen, but let's talk about treasuries though.
Oh yeah, let's dive into
So
that
so
one.
let's so let's so I have my theory about why Trump might have supposedly said that, he's going to make exceptions, right?
Mm-hmm.
But let's talk about the move we saw on the 10-year and the 30-year
Right.
last week.
So the 10
These
year jumped to like four. For those of you who don't know, the 10 year jumped to like 4.52%, making the largest single weekly increase since 2001. That is nuts. And the 30-year yield rose to about 4.94%. We're talking about crazy numbers. If you don't understand like these numbers, like there is some catastrophe about to happen to the economy if we don't get this thing under control. You know what I mean? The biggest weekly increase since 1982. That's nuts, man.
so here's the thing. When you see big moves like that in the bond market, right?
Mm-hmm.
That points to one thing: oversupply. Oversupply. So people are selling US bonds on the long end of the curve.
Yep.
So the 10-year and the treasury, they're selling it. They're saying we don't want this anymore, right? Let me give you a economic rundown of how treasuries play a picture into the whole global economy. Last year, right, the US brought in $4.9 trillion in revenue.
Mm.
So the US market, right? So that's how much money that's the money that they have to pay their bills, right? To cover all their expenses. So they do that by taxing us
Right.
and also bringing money in through tariffs. Those are the two main sources of revenue for the United States. Despite bringing in $4.9 trillion in revenue,
It's crazy.
they still had a deficit of $1.8 trillion. So that means that their expenses exceeded the money that they brought in by $1.8 trillion.
You need a whole other country to collect
So
taxes.
so 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 how do you make up for the difference? You issue debt,
Yeah. Yep.
right? So they issue treasuries, other countries give them money, and they use that money to cover their expenses. Now, because it's debt, you have to pay interest on that money.
Mm-hmm.
So you have to be paying interest payments on all of this money. Now, when the 10-year and the 30-year yields go up, the cost of servicing that debt has moved up exponentially. So let's just do the math, right? Let's just say let's just use $1.8 trillion, right?
Yep.
All right, let me do the math on this. 1.8 trillion. So trillion has what, nine zeros? No, billion is nine zeros, trillion is 12.
12 zeros.
One, two, three, four. So two, that's three. One, two, three. All right. Let's just say 4%. $720 billion in interest payments at 4%. 720 billion, right? Okay. Do the math again. Now let's just say it goes up to 4.9%.
Mhm.
It goes up to 882 billion.
God damn.
So that move basically is costing you another 800, what, $100 billion at least
Yep. At
in
least. Oh.
interest.
Mm-hmm.
So what does that mean? You're not getting that from you don't have enough revenue to pay it. So what does that mean? You got to issue more
You
debt.
gotta issue more debt. That's crazy.
So to me, that is what made them back up a little bit from all the big boy tough talk. Is that they saw that if other countries start dumping treasuries or they lose confidence in the US markets, that's not a good thing.
Mm-mm.
Treasuries are an essential staple to the US economy. And if the treasury market starts to not look so good because Japan holds our debt, holds US debt, China holds a lot of US debt, Canada holds a lot of U.S. debt. If all of a sudden these countries are like, you know what, let's just start dumping our treasuries, and
Yeah,
the yields start to keep going up, yeah, that's not a good look.
that is definitely not a good look. The other thing that on a macroeconomic level, like some of the things that's going to impact is there's going to be a higher borrowing cost. One of the things
Mm-hmm.
that you guys got to watch for is mortgages, car loans, business debt. They become more expensive because potentially, like you got to pay more for it, right? And that leads to slowing in consumer and business spending. So business starts spending more. You're gonna see that impact hiring. You're gonna see that impact all the other sectors, right? The housing market pressure, higher mortgage rates can lower demand, and like people are not gonna be able to buy houses. So guess what? It's gonna trigger some corrections, right?
Or
So
they're
it's
not
like
they're not gonna want to.
right. So it's definitely gonna create a lot of issues. So I don't know, man. What are I guess what are some of the reports that we should be watching for? Because it's like I'm thinking about CPI. Like how's CPI gonna look like in the next month? How's that gonna look like? If this
So
is really happening.
So I know we got CPI for March, which actually came out cooler than expected. I think core might have been a little bit hotter. PPI
Yeah,
came out lower than expected. But remember, we're looking backwards. We're looking at March. We didn't have the tariff stuff in March.
you're
So
right.
I would throw that report out the window.
Yeah, that
Now
doesn't
we
even
got it.
count.
Doesn't count. Now we got to start looking at CPI in April, May, June, and moving forward with all of this tariff stuff.
Yep.
So how should I put it? And it's going to still be hard to kind of factor in the impact because one day it's on, one day it's off. One day it's on, one day it's off.
Yep.
And what I'm probably going to be looking at, because we're in the middle of earnings season now,
Hmm.
what type of guidance are CFOs going to be giving for the next quarters? And to be honest with you, I don't even know if you can give guidance because you don't know what the
How?
cost of your goods are going to be.
How would you? How
How
could
can
you?
how can you give guidance when you don't know what the tariff landscape is, what it will be, and because it changes so much? I mean,
Mhm.
I don't know. I mean, the biggest companies that are going to get hit the most are going to be the retailers, especially those that import a lot of their stuff. They're going to get hit hard because how do you give guidance in this environment?
Yeah, yeah,
The
yeah.
housing thing you talked about, that's going to be, most mortgages will track the 10-year, right?
Hmm.
And now that the 10-year has moved significantly in such a short period of time, the cost of borrowing money is going to be more.
Yep.
So does that slow down the housing market? And if you look at the housing market, a housing market, as far as I think builds and things like that, those are usually what we call leading economic
Leading indicators.
indicators.
Yep. Yep.
So that's kind of telling you what could happen in the future. So I'm looking at bond spreads. So I'm looking at corporate, treasuries versus US treasuries and seeing if those spreads start to widen.
Yeah.
And I think from what I've seen, we're starting to see a little bit of an uptick there. So let me just take a look real quick and look at the data. Oh yeah.
Hmm.
Okay. So let me give you some information real quick. All right. I'm looking at spreads. This is the ICE Bank of America US high yield options adjusted spread, right?
Hmm.
Let's just go back about a month ago. Let's go to, let me see, how far back should I go? All right, let's go to March 13th, 2025. The spread was about 3.4 basis points. Now we're at 4.42 basis points. We have a
Yeah.
1% increase in spreads in a month. And then I'm looking at the ICE B of A double B US high yield option spread. A month ago, that was roughly 2 basis points. Now we're at 2.9. So we're starting to see spreads widen, which tells me there's a lot of risk in the market. So if they continue to widen and we have continued uncertainty, that's not going to be good for future projections. Now, Trump could back down and say, no more tariffs, and then everything could be all happy and dandy. So we don't really
Right,
know.
right.
We don't really know. But what the market is signaling, at least in my opinion, is that there's still a lot of risk in the market. Still a lot of risk. So, um,
I mean, I
man,
definitely agree. Like, it's just, I honestly don't think anybody knows what's going to happen.
nope.
Nobody has any idea. Is this a strategy? Is this a confusion? Is this a chaos that they understand? Maybe they don't know what they're doing. Maybe the administrator they have no idea. They just like, let's put this out there and see what reaction we get. And if it
Yep.
doesn't work, let's pull it back in because we have the ability to do that. You know what I mean?
Shoot
So
first. Shoot first. Ask questions
ask
later.
questions later. Yeah, it's like that's crazy, man. So the other thing is China, it just came out today, is this they suspended the export of critical rare earth minerals and magnets, which are essential for high-tech manufacturing. So think about electrical vehicles, think about aerospace components, semiconductors, robotic and defense system. So what is that gonna do to the overall market? Like I'm thinking Nvidia, all the semiconductors companies. I'm thinking about even Tesla. Like I'm thinking about all these companies. What is that going to do to them in the long term? And is there a deal to be made potentially with China?
So this is what I keep trying to tell people. If you look at how the world landscape has changed over the last 20, 25 years,
Mm-hmm.
China is the biggest trade partner in the world.
Yep.
They're the biggest. It
Yep.
used to be the US. China is the dominant trade partner in the US. People keep saying that the US has all the leverage. If you look at other countries and their biggest trading partners, like in Africa, in Europe, South America, Russia, it's China.
Mm-hmm.
It's China. So thinking that you can just bully China into doing what you want, I mean, you can see that China hasn't flinched.
Nope. Nope.
And if they're suspending exports of these fine minerals that other companies need,
It's a
that's not a
problem.
that's not a good look. That's a problem
It's a problem. It's a
because all of
problem.
those materials are needed in building like chips, like you said, EVs and all that
Yep.
stuff.
Yep. And I'm glad you mentioned like China and this relationship with Africa. So it's like I feel like even though maybe in the US has been a little bit more lax when it comes to investing in Africa and stuff. You know what I mean?
Mm-hmm.
China has ramped it up.
Yep.
If you look at countries like from East Africa to West Africa, from North Africa to South Africa, China has its footprint in all of these countries. And the way to do it is we issue debt, we build whatever you need. If you don't pay that debt, guess what? That property is ours now. You know what I mean? So they do that over and over and over and over. So if you literally go all the way in Africa, you will see China's imprint in every single major place.
When I was flying from Doha, Qatar to South Africa, a
Mhm.
lot of Chinese people were on my flight flying for business.
And that
Lots.
isn't that crazy?
Lots of them were flying for business. Yep.
Yep. So it's like they realize the potential that they can have, right?
Yep.
So if you go back, China's development just happened within the past, I'll say maybe like 25, 30 years, right? The
And
economy really boomed like within the
it's
past
been a
25, 30 years.
it's been aggressive.
Yeah, and they're like, hey, give us the dirtiest job, we'll do it. That's the first thing, right? Give us the dirtiest job, and they did it, right? They build manufacture, they build tooling, they build certain equipments that only they have that they can be able to produce some of those things. You want the littlest thing you can produce, send it to us, we'll figure it out. And if you think about the Chinese culture, they are very what's the word I'm looking for? They're very methodical. They're very systematical. So it's like it makes sense for them to be able to control some of those manufacturing because they're very, very detailed people, right? So if you think about it, some of the biggest companies in America, all of their stuff are in China. Some of them might have diversified, like, hey, let's go to Philippines or let's go to Indonesia or Malaysia and all these
And
different
and
things.
they probably did that after COVID when they had said that we,
Exactly.
we got to diversify our supply chain. We can't have
Yep.
all of our supply chain come out of China. If
Yep.
COVID never happened, you talk about the stranglehold that China would have on the supply
Yeah.
chain of
Yeah.
US companies, it'd be
Yeah.
crazy.
Yeah. Yeah. So it was like with them having that amount of control, I heard somebody say this like America first is great, but America alone, that's a problem because now you're isolating the whole world. We don't live in a place now where it's like we can be like, oh, we produce everything. Like if we really trying to take everything back and be like, hey, we're gonna produce everything in the US, it's gonna take us years to do that, and most of all, it's gonna be more expensive.
It's going to be
You
more
know what I
expensive.
mean,
You also have to understand that a lot of people in the U.S. probably won't want to do those jobs. And
bro?
if you want to, I guess stop immigrants from coming into the U.S. because those jobs, immigrants have been shown that they're willing to
Yep,
do those
they're willing to do it.
manufacturing and do those hard labor, hands-on jobs.
Yeah,
So if you're going to build all of these plants and do all of these manual labor jobs, but then you don't have people to fill the jobs because most people are like, "Oh, I'm not going to do that. I'm not going to do that."
right. And
You got a
most of the
problem.
job and most of those jobs that's like that we're talking about right now. So one of the biggest sector right now is AI,
Hmm.
right? You need an engineering mind to be able to work in the AI factory. You need to understand the components of what you're making.
Hmm.
We don't have enough engineers in America to understand what needs to be made in order even to produce a phone, right? We don't have enough. We have, but we don't have enough. In China, they have boatloads of engineers who understand these things, right? So it's like, how do we navigate that? It's like, and even if we want to do that, how long is it going to take us to be able to do that?
And
How
same
long?
thing, and same thing with India. You have a lot of engineers and a lot of
Same
folks.
thing.
That's why a lot of them come here because that's where they emphasize those jobs there.
Yep.
They emphasize the education there. That's why a lot of them come here, and you see them, doing a lot of the engineering work.
Yep. Yep. Go to
Um,
Silicon Valley. Go to Silicon Valley. You see all the go to major companies in the US today. There's a lot of Indians that works there. Why? Because they have studied those things and then they can come here and even the amount they get paid here is probably not comparable to what an American citizen would get paid for. So even those companies are still kind of like undercutting some of these guys. I work with some of these guys. You know what I mean? It's like they don't get paid enough as like a engineer that graduated from like let's say Harvard or something, right?
mhm.
But they know how to do the job.
They got the skills.
They got the skills.
Yeah,
Do we have enough people that have the skills to do that?
yeah. I mean, at this point, to me, I'll be honest with you. I mean, it's a very, very dangerous game by trying to bully China.
Mhm.
Um, I don't know. I kind of I see what Trump is trying to do. I just don't know if it's going to work. I don't know if it's going to work because, like I said, China doesn't have to budge.
Right.
China doesn't have to budge. They trade with so many other countries. And if you look at even after Trump was lifted their tariffs above 125%, what is it, 125, 140%? They said, we don't care.
We don't care. We want all the smoke, which is
We want
which
all the
is
smoke.
crazy. Which is crazy.
And I think to me, China is a superpower. Like,
Mm-hmm.
let's just call it what it is. China is a superpower.
Yep.
You cannot bully a superpower. You
Yep.
can't.
Yep. We I feel like we have underestimated, not just in America, but I feel like all over the world, people have underestimated the Chinese people. And now, slowly but surely, they have their footprint all over the world. You know
All
what I
over the
mean?
world. All over
So
the world.
this thing can go either way, man. Either can be where um the all the countries will go against China, or all the countries will be like, hey, look, we are with China. So I'm actually thinking about Europe too. Like Europe might be like, hey, America, you keep bullying us into trying to put tariffs on it because I think Europe just imposed like 25% or something like that on America's good. Also, they said they're gonna do that also. So it's like, I mean, it's like we're trying to isolate everybody. You know what I mean? It's like, why are we doing that? We don't live in that landscape anymore. We don't live in that landscape where we should try to work out deals with countries rather than be like, we have all the money and we're not gonna buy from you. They're gonna be like, okay, I mean, go ahead. We have isolated Canada. We have picked a fight with Canada. Canada's is literally right up there, guys. Like, why are we picking a fight with Canada? You know what I mean? We have picked a fight with all the countries south of us, South America. It's like, why are we doing that? It just don't make any sense to me.
And
But
I'm trying to find this. Instagram post that I saw about all the countries that trade with China that changed between 2020, 2000 and 2025.
Mm-hmm.
Like, if I find it, I'll send it to you. But man, before it used to be US. US, the US was the global trade partner of the world. Those days are over.
Yep. And
And
you can trace that back to like the whole what did they call them? When companies start moving production overseas.
mhm.
That's when all this mess started. You know, when companies start trying to cut corners, make things cheaper so they can sell it for a lot more high in America. That's when all this stuff started. So that's where we are right now.
And if and you mentioned something very important is the reason why, like, the US was very instrumental in creating China as the biggest importer because
Mm-hmm.
US companies were like, you know what? Labor's cheaper there.
Yep.
We can sell the product for higher margins if we do the labor outside the US.
Yep.
Call it what you want. You can call it greed, right? You can call it greed if you want to. You can
Mm-hmm.
call it, trying to pocket more money. So it's not like it's not like China just kind of like was begging the U.S. like bring your manufacturing here.
Nope.
U.S. companies made a conscious decision to take their production overseas, and then once China started to catch on and started to get a lot of that business, they basically just expanded it and they invested in that infrastructure.
Yep.
And you know, I mean, it's. I mean, if you go look at South America, I don't know what the website is, but you can go look at South America and look at how much South America imports from China. It is ridiculous.
Yep. Yep.
It is ridiculous. And to be honest, if the U.S. wants to isolate itself, to me, China's going to be just fine.
Yeah, they'll be
China's
fine.
China's going to be just fine.
Yeah. I
So
mean, this remind me like if you go back to history, I mean this is what the world have done. We have always traded with each other. There was never like you know uh, a way for us to be like, oh, we can trade, we can do like look at the Silk Road in that connects Africa and Europe. Um look at crossing over the different oceans to be able to deliver stuff back and forth. Like we've always done this. You know what I mean? This is nothing new. This is not a new phenomenon. But I think when you introduce greed, when you introduce money, when you introduce all of those different power trip that comes with all of that, I think that's what we end up having. It's like instead of us like working together and making sure like we can all have what we need, this is what happens, right? It's like now we want more money, now we want greed, now we want to make sure that we put this first and put that first. So it's like we are in a time where I don't know, man. I don't know if negotiation going to work right now. It might work with certain companies, with certain countries that maybe it's too small to be able to be like a big as China. Maybe they'll come to the table. And we see like, I think Venezuela came to the table. I think other countries came to the table like, hey, we're willing to negotiate or drop down our tariffs on the US goods and all this stuff. But the big one that we need to make a deal with is China. And I don't know if they're going to do it. I
look
really don't know if they're going to do it.
look at this chart. This was you see all the blue?
That
So
was
that's where the biggest trade partner was the US in 2020. I mean in 2000. Look at 2025.
gone. We only focus on North America. That's it.
That's it.
And we're picking a fight with
Yeah,
and
if
we're
you have
picking a fight with our biggest importer. That's crazy.
Yeah, if you have a chance, this is on Jake Explains Instagram page. So Jake, JAKE_explains, EXPLAINS. And it talks about how China has grown their trade dominance over the last 25 years. So, I mean, I like I said, it is going to be a trade war. It's going to be a lot of back and forth. There's going to be a lot of uncertainty. Um, and amidst all of the chaos, one area that I have been talking about, and I will give you three names that have held up really nicely in this environment. So I want you guys to go take a look at CrowdStrike. So CrowdStrike is a stock that, despite coming off the highs of $455, even though it has dipped below the 200-day moving average, right? It has reclaimed that level
Yeah.
and it is trying to break. What line is this? Okay, that's the 50-day moving average. Okay, let me remove that. So right now it's finding resistance on the daily simple 50-day moving average, but that stock has held up pretty well. You've got a
Yep.
double bottom that's now formed, right?
Yep.
And if it starts to break above 392, that might be a name that I might start taking a look at. Let me give you another name. And if you look at the strat, for those that trade the strat, you've got green on the daily, you've got green on the weekly, you've got green on the monthly, you got green on the quarterly, you got green on the yearly.
Yep.
There's not a lot of stocks that you can say that about in
Not
this
right
environment.
now.
Not
Not
right
right
now.
now. Mm-mm.
Let me give you another one. Oklo.
Yes.
Let's go look. I'm not Oklo. I'm sorry. Okta.
Octa.
Okta, not Oklo.
Ooh.
That's
Double
another.
inside on the day.
You got double inside on the day. You have strong support near the 200 EMA and SMA.
Mm-hmm.
Um, and you've got resistance right now at that 50-day moving average. That would be a name I'd be looking at as well.
Yep.
It's off the highs of 118, but so far, compared to other areas of the market, it has held up pretty good.
Mm-hmm.
And then Aklo is another one. I wasn't going to talk about this one, but it was on accident. This is another one that's holding, excuse me, holding that 200-day EMA right now,
EMA. Yep.
is it EMA or SMA? Am I looking at
SMA.
SMA? And it's right at that 200-day EMA right now. So the one reason why I bring these companies up is because if you compare them to other sectors of the market, not only they're holding up very well, their business is not directly affected by a trade war. Now, they will be affected if the overall market headline is bad. Obviously, duh. Like you can't like there's no if growth is slowing down, borrowing cost and business spending is slowing down, obviously they're going to be affected, but they're not affected by the trade war
Right.
specifically.
Right.
Another thing that I will also point out is that again, people think that tariffs are what are causing the sell off. That's a piece of it. Don't get me wrong; it's part of the picture. But let me give you an asset class that is not affected by tariffs. Go look at Bitcoin.
Yeah.
Bitcoin is selling off. It has nothing to do with
Nothing to
tariffs.
do with tariffs.
Nothing to do with tariffs. But it's selling off because people don't want to take a lot of risk in the market. So we'll see what happens. Like I said, I'm still big on cybersecurity and software as sectors of the market that, again, if you want something that's somewhat insulated from trade wars, that's a place that you can still look at.
Yep.
I'm not saying that these are going to be stocks that you want to necessarily trade, but these are sectors or these are stocks that you want to own. So again, I still think it is prudent to be buying stocks in this environment, but I don't think it's prudent to be buying blindly
Right.
and to be buying all at once. I think you have to be real strategic about making entries consistently over the course of time. So,
Yep. 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 And I want to say this, like I was reading on Unusual Whales. One of the things that they say is like the last 5 years of trading have had numerous once in a lifetime events, right? If you think about from COVID all the way till now. So we had COVID crash, market fell like by 34%. In 2021, we have the whole GameStop and AMC saga, right? Like if you're taking advantage of that, you would have made some money on that too. 2022, we had the beginning of the Ukraine and Russian war. And then, the
the,
collapse of so many different like Bitcoin stuff, like FTS collapses, all this
and
different
and
crypto stuff.
the Fed was raising rates like crazy.
Yep. Yep.
Yep.
In 2023, we had the Silicon Valley Bank collapse. Like think about Signature Banks, First Republic Banks, and then we had the Israel and Hamas conflict. All of those things kind of had like a little bit of impact on the market. In 2024, The Chinese stock market crashed by 26%. I don't know if you guys remember that, leading to the third highest VIX. VIX actually went up like crazy during that time. The Tokyo stock market crashed, falling about 12.4% in one day. Now we are in 2025, and the Trump tariff war trade conflict leading to one of the worst drop ever in the Dow, the Nasdaqs, and SPY. They're all down about 11 to 17%. So I'll say this and say this: like we are, there's opportunities, but like while they say, don't just blindly throw your money in there, right? And in the long term, we're going to be okay. Buy stocks and hold for long term. In the short term, I will try my best to not, you know, do short term trades because you might be losing a lot of money doing those short term trades. You know what I mean?
Especially if you're not experienced. I will say this. This is a day trader's dream. This is
Yep.
a day trader's market. You have to be really honed in on the short-term price action. And if you work a full-time job and you don't have the opportunity to sit in front of a computer all day,
Mm-hmm.
this is not a trading environment you want to be in. This
Right.
is not. Now, if you're doing strangles and straddles, completely different.
Yep.
Because again, all you need is a magnified move to one side. As long as the market doesn't trade sideways, and as long as you get a big enough move, and based on where the VIX is, we probably will get big enough moves on an intraday basis.
Yep.
You'll be okay.
Yep.
But for me right now, I'm really trying to focus in on buying stocks of good companies. And I might even have to consolidate some of my positions because some positions I'm not feeling very strongly about based on the trade war. Another stock that is not ice that's not being affected by the trade war because of their business. I've been looking at MSTR. I've been wanting MSTR to drop below this 200-day EMA for months, and it hasn't. It has been
Yeah. It's
finding
just,
support,
wow. Yeah.
and now you've got like a triple bottom that's formed
Mm-hmm.
on the stock. Like if you go look at this 235 area, strong support at 235. So there are names out there that are not going to be affected by this tit for tat trade war.
Yep.
Not saying that the stocks are going to go up all the time. There will be some volatility, but if you look at the business and say, is this business directly affected by trade war? I can say Okta, and I can say CrowdStrike. The answer to that is no. MSTR. The answer to that is no. Um, but go look at names like Nike or
Hmm.
Lululemon.
Lululemon.
Those names are going to get absolutely destroyed
Yep.
until they can figure this out because there's no way Nike can bring their manufacturing to the US.
No, I mean, you're gonna be paying double, maybe triple on your Jordans and stuff.
There is no way Nike is bringing manufacturing to the US. Impossible.
Yep, yep, yep.
Impossible. So
I don't see it happening. So we are kicking up earning week this week. Monday, April 14th, we have notable ones that are reporting like Goldman Sachs report earnings before the market opens. MTB also is releasing their report. On Tuesday, April 15th, Bank of America. So all the banks are coming. JP Morgan actually released theirs last week. They moved up a little bit. I mean, in the beginning, I don't know what they closed at, but I know that like they went up green to red to green. So I think they closed the day up a little bit. So we have Tuesday, April 15th, we have Bank of America, Citigroup, PNC, and US Bank Corp all reporting on Tuesday, April 15th. On Wednesday, we have Morgan Stanley that's reporting also on that day. Thursday, we got some good ones. We got Netflix reporting. We have TSMC reporting. We have United Healthcare Group reporting. We have American Express reporting. And then finally wrapping up on April 18th, we have Procter Gamble and then Johnson & Johnson. So these are not bad. I think this is going to give us a good indicators because they're a mixed bag. You know, we have
I
the banks, we have the softwares, we got TCMC in there. So yeah,
TSM is one company that I will be paying attention to what they say on their call
yep,
because when it comes to chip manufacturing, they are the 800-pound gorilla in the market. So I will be really interested to see what they say on their call as far as how tariffs are affecting their business, whether or not they're trying to ramp up production in the Arizona plants that they've built and seeing that maybe they need to get those started sooner.
Yeah.
But I will be paying attention to what TSMC says. So,
But another thing I like, and I heard this from somebody, they're like, even though we see those companies move their production to America,
mhm.
they're not really shutting their production back in China or
Heck
Asia.
no,
They're not
heck
shutting
no.
it down. So it's like, are they doing this just to appease the administration?
And if I'm not mistaken, I don't think that they're building their best and fastest chips in the US. I think
No,
they're still building those in Taiwan.
no, those equipments to build it here to bring it, yeah, no.
Yeah. So,
So that's another thing to think about is even though they're building and they're bringing more stuff over here, they're not really bringing the big old their whole chunk of business. No companies bringing everything, shutting everything down in China and building everything back here.
heck no. What?
That's committing suicide right
Heck
there.
no. Especially since, again, as president, right? Policy can change with the next president.
Mhm.
Like, why? Like, maybe you bite the bullet for the next 4 years, and then everything resumes back to business as usual later
That's
on.
another thing too. Is like, do you make short-term decisions based on the current administration and what happens when the next administration comes? And now you're like, oh shoot,
They
this wasn't a
can
good
they can
move.
come in and just overhaul
Yep,
everything,
yep, yep.
and we're back to where we were
That's crazy,
before
man.
all of this.
So we have some economic indicators coming up next week. Not a whole lot, but some of them to keep an eye on. I think Atlanta, the Fed President Raphael Bostic is speaking Monday. I don't know how much he's going to say that's going to move the market. We have the import price index on Tuesday. We have the retail sales coming up on Wednesday,
Uh-huh.
so we'll keep an eye on. And then we have the home builder confidence index also. That's another one to keep an eye on. Um, Thursday, of course, we have the initial jobless claims, building permits. We talk a lot about that, so that's going to give us an idea also what's happening in the real estate market. Yeah, but there, other than that, we don't have too much going on. China economic data is coming up, so investors are waiting China's trade and industrial production figures, which could reflect the impact of global trade tension. So that's all we have coming up next week. Not a whole lot, but some really small ones I need to keep an eye on.
Yeah. And earnings season is starting to get kicked off. So as you go through earnings season, don't pay attention to EPS and revenue beats. That's not what
That's
matters.
not gonna move yet.
Listen for guidance.
Mm-hmm.
What are these companies projecting for the future quarters? That is the most important metric because again, what you did last quarter before tariffs were implemented and all that stuff, I don't care. No one's going to care as an investor. I want to know what are you projecting for the
For the
future.
future. Yep. Yep. Yep.
So that's what you should be listening to. So when you're seeing all of these stocks either going up or down based on EPS and revenue, it's not about that information. It's about guidance. What
Yep.
are you projecting? So
Pretty much. All right, man. Well, going into next week, starting Monday, what do you advise? Anything you want to give to the people as we are heading into this next week? I know you talk a lot already about, possibly doing, straddles and keeping an eye on the guidance and all that stuff. But any other things you want to talk about?
I will say that in the environment of a very chaotic headline sensitive market, do not sit there and do nothing, right? Do not sit there and do nothing. And when I say that, I'm not saying go out there and take your last $500 or your last thousand or your last 10,000, $20,000 and just start buying stocks blindly. But take some of that capital and start to deploy that into the market. And again, I am not going to sit here and tell you that we've seen the bottom. I can't sit there and say that confidently. I don't think anybody can sit there and say that confidently at this point. But you want to be a participant in this market because, again, there are going to be names that are going to be on sale that are going to benefit you in the long term. Don't trap yourself into the mindset of just thinking about what's going to happen over the next month, the next 2 months, the next 3 months, the next 4 months, or even the next 6 months.
Yeah.
Start thinking about what's going to happen over the next 1 year, over the next 2 years, over the next 3 years, over the next 4 years, over the next 5 years. Because I will go back to when the sky was falling during COVID, and we, as at the firm I was working at, were going to our clients and saying, "Hey, don't sell now. Stay the course. If you got extra
Mm-hmm.
cash,
Put
this
it
might
in.
be a good time to start deploying it."
Mm-hmm.
And again, we were telling people, don't buy everything now. Be strategic and go look at where the market was in 2020 and look at where it ended up in 2025.
Yep.
Now, during that process, we did have one down year. I think that was 2022 where the market was down.
Yep.
Market was down in 2022, but we still were able to reach all-time highs. So I've said this before. I will say it again. When in doubt, zoom out.
Zoom out.
When in doubt, zoom out. So look at names that are going to be good quality companies that are still going to be around over the next couple of years. Be an owner of these companies, right?
Hmm.
I mean, we had a $95 Nvidia last week.
Yep.
No, did I say 95? No, 85.
It was like 85. It dropped down to like 80 something. Yeah.
Nvidia dropped below 90.
Mm-hmm.
To me, that's a buying opportunity. I'm not saying it's not going to come back down. It could come back down,
Yep.
but I'd still be a buyer.
Facts.
So what I'm personally doing right now, I'm looking at what expenses can I cut out of my budget so I can have more money to buy stocks? do I got to eat
Step.
top? Do I got to eat top ramen for a few weeks? Do I got to like not turn on my AC for a few weeks so I can have
That's
extra money
funny.
to buy stock? That's what I'm doing right now.
That's funny. Yeah, yeah. I think the easiest way, honestly, like your 401k. For me, it's this is probably a good time. I'm not gonna say go and do it, but it's like it's a good time to
Increase
go out maybe
increase your
like two,
contributions. Yeah,
maybe
increase
go
your
two,
contributions
3%. If you can afford it, go
if
go
you can
two,
afford
three.
it.
You will not miss it. 2 to 3%, depending on how much you make it. It could be an extra $50 to $100 or $200 a month. You know what I mean? Depending on how much you make. It's not gonna be a lot, and you're not gonna miss it. Trust me. Your brain is gonna make your budget is gonna make some type of adjustment so you don't miss that money. You know what I mean? But I think that's probably like the easiest thing to do right now. If you
That's the
already have a
easiest.
401k,
That's
because
the
it's like
easiest thing you can do.
you don't have to look at
Easiest.
it. You don't have to look at it. You just make the change and
That's the easiest thing you can do right now is
yep.
if you're putting in 5% into your 401k, maybe go to 6.
Mm-hmm.
Or maybe if you don't want to do it by percentage, maybe instead of putting in $100, you put in $200
Yeah,
per
do a
pay
dollar
period.
amount. Yeah.
Maybe if you're doing 400, maybe you want to go up to 450,
Yep.
460, 470. Make that increase.
Yep. Yep.
So that's what I would say right now. You know,
Yeah.
focus on owning pieces of the market so that when you look back, because the thing that I always find so funny, and this is one of the biggest reasons why throughout my advising career I have pivoted away from working with people to working with institutions
Mm.
because people make emotional decisions when it comes to money. That's just how we're wired, and some people can't break the habit.
Yep.
So throughout my career, right, I started my career during the financial crisis. Very interesting time to start a financial advising career.
I'm surprised you hang on. You hang on there.
And we were going out there trying to tell people to buy stocks and get back into the market. People were like,
Nope.
nope. People were like, nope, I'm not doing it. I'm not
Mm-hmm.
doing it.
Mm-hmm.
People who did it and stuck with it were very, very, very happy.
Yep.
Bank of America was a $3 stock, my friend. I remember those days.
That's crazy.
Bank of America was a $3. And the thing is, we weren't selling, I wasn't selling individual stocks, I was selling mutual funds.
Oh wow.
And I remember being fresh out of college, talking to some of my friends as well, telling them to do it as well, and trying to turn some of my friends into clients. Some did become clients.
Mm-hmm.
And this is when I told you, this is when I started buying the Ivy Science and Technology Fund.
Yep. Yep. Yep.
That's when I started buying it. My manager was telling me, he said, Wale, how much are you making per month? And this is a full-time commission job, commission only. It was like take a couple of dollars from your paycheck, find a mutual fund or and just like
Just buy it.
just buy it. He said just do automatic investments into this mutual fund. Like just pick one because they allowed us to get into mutual funds without paying the sales load.
Mm.
And that's when I started putting $100 a month into this science, the Ivy Science and Technology Fund. I told some of my friends to do it. Some did, some didn't. But and I again, I'll never forget the biggest holding in that fund was Taiwan Semiconductor.
That's crazy.
So
That's crazy.
people who did it, I mean, this is probably over 15 years ago now. I mean,
Yeah, they're happy.
you're probably sitting very happy. One of my
Mm-hmm.
first clients was my parents.
Oh.
I've seen what that looks like now.
It's like I see how it looks like. That's amazing, man.
So don't let all of this headline blind you from
Yep.
being strategic about building your wealth over the long term.
Yep.
But I know that now that we live in this world of instant gratification, right? Everybody's starting to lose sight about long-term investing.
Yep.
But that's that's the last piece of advice I would give is that you
Yep.
gotta think strategically long term. I mean, I
Yep.
got some friends that I've helped set up, um, 529 accounts for their kids to have money for college. Maybe you start boosting those um, contributions as well.
Mm-hmm. Mm-hmm. Mm-hmm.
Instead of putting the $50 or $100 or $200 you're doing, maybe you boost it by a couple of dollars.
Yep.
No matter how small, to me, it's going to help you because at the end of the day, the long term wealth game is about owning a bigger percentage of the pie. Like you look at Warren Buffett, the only reason why he's collecting all of these like ridiculous dividends or these ridiculous amounts of interest on bonds and treasuries or stocks of Coca-Cola and Apple is because every year he starts to own a bigger piece of
Bigger
the
share.
pie.
Yep.
And as the pie of those companies starts to grow, so does his wealth.
Hmm.
So don't lose sight of that, right? I know trading is the new thing that's come out since COVID, and everybody tells you you can make this amount of money and all this stuff, right? Don't neglect your boring long term strategy. Don't do it. And a lot of institutions, right, who are investors like foundations and endowments and things like that, the conversation that they're probably having with their advisors is where do we put our cash to work?
Yep.
Where do we have opportunity? That's the mindset you should be having right now.
Yep.
Don't have the mindset of, oh my God, the market is down, it's crashing, blah, blah, blah. Think strategically. This is an
Yep.
opportunity. How do I take advantage of that? So
The-
I will keep hammering that tone until we get out of this mess. And when we come back in the next couple of years, when things start to turn around, hopefully, I think people will be very happy with where they are financially. So
Facts. 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 One thing I always say is like, time is gonna pass. You might start investing. Time is gonna pass. 10 years is gonna be here in no time. 20 years is gonna be in no time.
I mean, think about it, right? We're 5 years removed from COVID now,
Yeah. Yeah.
half a decade from COVID,
Very fast.
very
We blink.
fast.
We blink, and we 5 years out. So time is gonna pass.
I mean, I went to South Africa. I saw some of my cousin's kids that I saw back in
Wow.
2017, 2018.
They're grown
I saw some that weren't even born.
people.
Last time I saw them.
Wow.
And I'm just like, time has gone by so quickly.
Yep.
And again, it's the only asset you'll never get back.
That's it.
The only asset you'll never get back. So
Yep. And every
thank
decision you make today, where you put your money today, is going to matter in like the next 5, 10, 20 years. You
your
know what I
future
mean?
self will thank you if you take advantage of the opportunities that you're looking at
Facts.
today.
Facts.
So
All right. With that
uh,
being said, I mean, we'll see how tomorrow looks like. It looks like we are losing steam on the
on the
futures right
futures,
now. I mean, yeah, we
we're
lost.
yeah, we're still green, but we're off the highs.
Yeah, we're losing steam right now. So unless if the another news come up, we're probably gonna we're probably gonna lose all these gains that we have overnight. So we'll see how the market opens in the morning, and hopefully we'll see some better news. I just hope we don't get any crazy news. But it looks like that's what people depend on these days. Imagine having the power to be able to tweet one thing and change the direction of the market in
I'll
five
also
seconds.
say this: if you you might want to follow Donald Trump and turn your alerts on.
Bruh, bruh. When did I post this on my Instagram? I was like, do yourself a favor, follow Donnie on all social media. Do yourself, even if you don't like the guy, please just follow him. Or if you go on Twitter, if you put like hashtag Trump or whatever, you get everything that he's tagged on. Please do yourself a favor. Follow that man every
Especially
morning.
if you're a trader, you want to know when news is dropping.
And you want to keep an eye on his schedule, knowing when he's going to speak, what time he's going to speak. So that way you're not taking any trades before he speaks, because you never know what direction he's going to go. Or maybe you want to do a straddle as he's going to talk. I don't know. But do yourself a favor, man. Like, especially if you're going to be trading day to day, please follow this guy. Please do. Because,
Yeah, because you got to be when the market is trading on headlines, you want to know when those headlines are going to drop.
yep. Yep. All right, y'all. With that being said, Wale, I appreciate you coming back on Sunday, man, jumping on here, giving it to the people. We will
We
talk on Friday.
Friday. We
Yep.
will not be
So,
here Wednesday, but we will be back on Friday. Yep.
yep. With that being said, yeah, have a good Sunday, and we will talk to you next week on Friday. All right.
All right. Take
Peace,
care.
y'all. Bye.